Okay, well, welcome everybody. Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to Trading Coach's Playbook. My name is Brandon Wendell. I'll be your host for the next hour or so. And we're going to dive into this and take a look at multiple time frame analysis today. Kind of different ways of doing it and the proper way, in my perspective, to do it. So we'll talk about how that works. And so, yeah, good morning, Helen. Good afternoon, Kevin. Again, depends on where you are in the world. Everybody's looking at different times here. So that's kind of cool that we can all come together. Anyway, this is being recorded. It'll be on the YouTube channel for us as well. So you can go ahead and catch this if you missed something on the YouTube channel for Wealth Builders HQ. Just search the YouTube for that. So good morning, Evelyn. Anyway, I just need to remind everybody that we're not broker dealers or investment advisors. We're going to look at different securities because of the conversation here for educational purposes, but I'm not personally telling you to buy, sell, or hold anything. I'm also not tailoring this towards any particular individual. And there's always risk involved in the markets. No matter what we do, we can't eliminate it. We can only minimize or manage the risk. Anyway, what else we have there? Oh yeah, we're not subject to trading restrictions. I can have a position or initiate one at any time in the markets. So that being said, we do have a lot of free workshops that are available. You can join Rob every Monday for Power Hour. We have the Trading Coaches Playbook every Friday. We do the market mornings with Rob. I do some other workshops, Crush Your Trading in 2 hours coming up next month. It's kind of cool. And then there's also some premium workshops that you can get involved with as well. And we'll talk a little bit more about that if you're interested. And of course, you can always stay in touch with us too via social media. There's quite a few different ways there. My Twitter handle is not being shown there, but if you're interested, you can follow me at TraderBdub. That's my Twitter handle. I just put it in the chat for you as well. So as I said today, we're going to go ahead and talk about multiple time frame analysis and how to do it properly. Okay, yeah, it's casual day, no bow tie today. I thought about it, but I'm going on vacation today. As soon as I'm done here, I'm going on vacation. So I figured, nah, that's okay. I'm going to be casual. So let's see. I'm going to actually steal from another presentation I did once before called The Inner Circle and basically talk a little bit about proper perspective. My mom is in South Florida. She got away from the cold on the western side of the state. So I'm actually going to drive over there and visit with her for a little bit. So the wife and I are piling in the car afterwards, and it's only a 2-hour drive. So anyway, when we're looking at the markets, one of the mistakes that many traders make is they don't get proper perspective. You know, when you look at a chart, say for instance, I bring up a chart of, let's see here, the S&P futures. Okay, so I jump into that chart and I happen to be on a 1-hour time frame right now. Well, the problem with that is, yeah, I see it might be coming up to a little bit of supply right here, but I have no idea if it's likely to hold or break. That supply zone could be one of two things. It could be an entry for a short, or it could be an exit for a long. And what I need to know is the proper perspective. I got to take a look at the big picture. It's almost like going to Google Maps or Waze and typing in an address. You zoom in on that address, but you don't know, are you going north, south, east, west? Could you take major freeways or side roads? You have to kind of zoom out to get a better perspective of what's going on. And the same thing happens with our trading. As a trader, we should look at no less than 3 different time frames for every one security that you're trying to trade. That way you get the proper perspective. And as I said, demand zones can be used to enter a long or exit short. Supply can be used to exit short or enter a long. So we need that perspective. And trend tells us the correct direction in which to trade. So there's a saying, the trend is your friend until the bend in the end. So we want to identify which trend is dominating us right now and make sure we trade in that trend direction. So the bigger thing that we're going to look at is what's called field of play. In my previous life, I worked for another company and they called that the curve. Here, really, I don't understand that name. It makes no sense to me. So field of play, that tells you where the game is going to be played, right? You're not going to be out of bounds. You're going to stay within that field of play most likely. So it gives us an idea as to where we're likely to travel during the time frame that we're looking at for our trading. So I think it's just more apropos. And I'm trying to remember who gave me that. I think it was Trent, one of my students that did that. But anyway, that's the Wealth Builders Mastermind group. Yeah, so you can join that too. But Oh, Trip gave it to me. That's right. Thank you, Bill. It was Trip. Couldn't remember who it was. I knew it started with a T. Thank you so much. I want to give credit. So Trip was the one who was one of our students. That's what I love about being involved in the Wealth Builders HQ community is that I communicate with other students and I learn a lot from them and I get a lot of great ideas. As much as I'm teaching, I'm also learning as well. So the first thing you have to determine is the time frame you're going to actually get into when you first start trading. And by the way, one of the other things I want to mention before I go any further is not just the inner circle and the mastermind group, but also my group that I lead, which we do this on a regular basis. It's called the E-mini Think Tank. And if I go back to my chat, right, or not my chat, my browser right here, you can see if I go to the E-mini Think Tank, a lot of what I'm going to talk about here is actually covered in some videos and lessons there. So if you're interested in joining us in the E-mini Think Tank, there's the link that was just put out there. And one of the things you can do is you'll see if you become a member of the E-mini Think Tank, we meet 3 days a week live, Mondays, Wednesdays, and Thursdays. We actually look at the markets from 9 a.m. to 11 a.m. live in the markets and just take a look to see what trading opportunities are out there and just kind of dissect the markets. Those are all recorded as well. You can see they're recorded. We can go back about a month or so just to see the previous recordings. Additionally, there are what we're called bonus videos. And these bonus videos are educational. So sometimes they're just open Q&A. Many times they're actual identification of how to trade properly following certain rules. So the one we're talking about today is under trading routine and finding zones, where I talk about multiple time frame analysis. In addition to the videos, there are documentation pieces that I go ahead and, I note everything I'm talking about. So just looking at something here. Okay. Keep getting messages. My phone's been blowing up all morning. Of course, as soon as I get ready to go on vacation, right? Anyway, but there's a lot of data there and a lot of information. So it's kind of cool. You can go into that and learn a lot. So kind of self-paced, but also backed up with live sessions. So anyway, the first thing you got to do when you're looking to trade is figure out what time frame you feel comfortable trading on. And not everyone is going to choose the same time frame. Okay, what I mean by that is when you take a look, for instance, right now I'm on the 1 hour time frame. Okay, on this 1 hour time frame, my zone is a little large. I guess we got about 13, 14 points. Now remember, each ES is each point, for the ES is $50. So right now we got 43.91. Might as well get it accurate. 25 minus 43.77.75. So 13.5 points times $50 a point. That zone has a profit or loss of about $675. Now, for some people, that's not a big deal, but for other people, that is a big deal. $675 is a lot of money. So if you want to reduce your risk, there's a couple different ways of doing that. One, probably the easiest, may be the time frame. If I drop down to let's say 15-minute time frame and go back and look at the same area, pass it? Nope, not yet. There it is. In that area, I might be able to narrow down the zone and therefore take less risk in the position. So let's see the low here. Excuse me. 77.75. The close 76.50. It is. So we have a tighter zone here now, where I have drop, base, rally, and now my zone is smaller. So we got 43.81.75 minus 43.76.5, 5.25 points, again, times $50 a point. We're only looking at $262 of risk. So I was able to reduce the risk by changing the time frame. Okay, there's still risk, there always is, but we can manage it by type of contract we trade. We can trade micro rather than the E-mini, or we can change our time frame and even number of contracts we trade. So you choose the time frame that you feel comfortable with based on the size of the zones and how much risk you'll have getting into the trade. So this is not something you're going to want to change all the time. You try to look at the average size of the zones on the securities you like to trade. It could be, instead of the futures, perhaps we're doing stock, right? We can go out to QQQ. Okay, that's an ETF that tracks the NASDAQ. Same thing. I'm looking at a 15-minute chart. I can identify drop, base, rally, and look to see, well, that doesn't quite qualify, but I can look to see how much risk I would have. Or we can do the same thing with, let's see, ADA. In crypto, oh, we'll just do Solana. That one just popped up. That's easy. It's gonna let me have that one. There we go. So same thing. We can just go into whatever time frame we're thinking about trading and look to see what is the average risk based on the size of the zones that we're looking at. So right there, we got 89.72, 89 or 88.74. Okay. So great question. Do higher timeframes have a higher probability of working, even though they might carry more risk or higher probability of profitability? Yes and no. Honestly, zones are zones. It doesn't really matter necessarily what time frame you're on. However, if more people are focusing on a particular zone and follow it or respect it, then yes, it will work better. So that being said, typically higher timeframes will have more eyes on it and therefore will typically work better historically. You know, when you take a look at these market makers who are trading on computers for the big brokerages, they're using intraday charts as well. They're using longer time frames and shorter. So they're there, they're everywhere. Plus, you know, when you think about it, if you were to look at a daily zone, for instance, okay, all we're really doing when we look at a daily zone and then try to go to a smaller time frame to narrow it down, see, we got drop, base, drop right there. When we go into the smaller time frame, we're just kind of fine tuning where the computer started the order entry inside of that area. But to the simple question, simple answer to Bill's question, yes, higher time frames generally have better probability of working because there's more people looking at them than the smaller. But it doesn't mean that the smaller ones cannot work. So what I kind of got into trading, one of the things I did is I read quite a bit, and I still do, I read a lot. And one of the books that I read was called Trading for a Living, and it's by Dr. Alexander Elder. I thought it was an amazing book, not for the technical analysis portions, but the psychology portions. Okay, Dr. Elder has a pretty amazing story himself. Anyway, excuse me, that tickled today. But Dr. Elder mentioned in his book that timeframes are related by a factor of 5, typically. And he fudged it a little bit to use 4 or 6 because you want to stick with common timeframes. So the lower time frame that we're going to start with is called the zone time frame, because that's where we're identifying where to enter, where to exit, basically the zones we're going to trade. Then what we're going to do is look for the trend that's going to affect the lower time frame in which we're trading. Well, that lower time frame, that intermediate time frame is called the trend time frame. And to determine what time frame to use, you simply take the trend time frame and multiply it by either 4, 5, or 6. And that's it. That's how you get that bigger time frame. So if I decide I want to trade, let's go to I'll go to currencies. Fun. Forex. There we go, Aussie yen. And perhaps I go down to a 5-minute chart to trade on. I'll clean up my chart here. So if I'm looking for zones, you know, first things first, I'm on my lower time frame. I found, looks like a zone right there. We have rally, base, drop, and drop, base, rally right here for my demand zone. And there's techniques that I have for using and finding those as well that, again, are in the members area here. You can see if I go into my fundamentals, I have, where is it here? Yep, leg-based zoning technique from 2020. I don't know if it needs to be updated. Probably not. Hasn't changed. But there's also bonus videos on this. So if you become a member of the E-mini think tank again, you can actually see how to find zones with high quality. Where is it? There it is. Trading routine and finding zones. So you can use those videos to help you out to learn how to find high probability opportunities. But once I get in, oops, my bad. Once I get in, this was on the 5-minute time frame. So we have the zone time frame for 5 minutes. And again, what I'm trying to do here is locate zones to trade, either entries or exits, or wherever it may be, but I'm just trying to figure out where I'm going to trade. Then I need to go to my higher time frame, which I said is my trend time frame. And that trend time frame is simply going to be whatever the zone time frame is multiplied by 4, 5, or 6. Now, because I want to stick with common time frames, I'm probably going to use 6 in this case and use a 30-minute chart. And what I'm doing there is I'm determining the trend because that is the best direction to trade. I want to trade in the dominant trend direction because I'll have the best opportunities typically. So that is our trend time frame. So in this case, I'm going to go to a 30-minute chart. And now I can see that we're pretty much in a bit of an uptrend right now, right? We'll see if it's going to continue. If you take a step back, it's more choppy sideways, but short term, we're a bit of an uptrend. Now, again, there's a whole other lesson on trend identification. So if I go back, let's see, do I have it in here? I know there's probably in the trading routine. I'm not sure if there's a separate one. Nope, there it is, trends. I knew it was important enough to have a separate recording. And there's also separate documentation for it. So in this case, we could say perhaps we're in an uptrend or at least in a sideways trend. If we're in an uptrend, that now tells me that demand zones are entries and supply zones are targets, but not entries to go short. Okay, I don't want to go against the overall trend. Well, the perspective time frame, that's where I'm going to determine the field of play. Okay, the perspective time frame is simply the trend time frame, again, multiplied by 4, 5, or 6, but you don't have to use the same multiple. Okay, just because you use 6 for one of these, it doesn't mean you have to do it again. But if I go from my trend time frame, again, now we're going to look for a perspective time frame, and I can use 150 minutes or 180 minute if I choose to. And what I'm doing here is I'm going to find the field of play. And basically that's going to tell me where the trends will likely end and reverse. Okay, it's not perfect. Nothing is in trading, but we're dealing with probabilities. Yeah, 120 minutes would also work too, right? Times 4, I forgot about that. So we could do 120 minutes. What's going on here? The phone call, I don't know that number. Anyway, so 120 minutes, 150, 180. Obviously, there's a lot of differences between all those, so it's your choice of which one you want to use. But yeah, you could definitely do that. And it tells you where the trends are likely to reverse. So right now we can see that we're in a bit of an uptrend right here. And if I want to know where's that uptrend going to stop, I could go to that higher or perspective time frame. So let's say we go to the 120. On the 120, let me get the text out of the way here. Well, we don't have a supply zone right here. So this upward movement may be able to continue. This little bit of red we're getting might just be a small correction before we continue to go higher. And I could put in a horizontal line and continue to look back. Oh, and you can see that that was not fresh. This was actually a zone in the past. And we'll go back there for a moment in a second here, or in a moment. Just keep going back and see. Here we are. And we don't actually have a zone there, believe it or not. So I would just keep going back until I see where the top of the field of play might be. And here it is. There it is. So we have rally, base, base, and the drop. Okay. And I go back to the current price, and there we are. So that's what I've got on the 120. As you can see, we are turning with a little bit of a pause in the area we've hit before and turned, but that's not likely to end our trend right now. If we take a look, excuse me, at this previous impulse up, the previous move was from February 21st, and obviously we hit that supply zone. That's when this was fresh. Get that out of the way. Again, you can see this was rally, base, and drop. So when this formed and we were in an uptrend here, If you were, say, back here trading in mid-February or late February and identified that you were in an uptrend, you should have been buying the pullbacks to areas of demand, but knowing that when you got to this level up here, this 83.60, that you were likely to stop the upward move and start a downward trend. That's the top of the field of play. So going into the 30-minute time frame, let's take a look at that. Okay. I'm not going to go into all the details as far as trends go, but you can see right here, yeah, 2-hour chart can be an interesting time frame. They all can be. So right here, we have an uptrend confirmed at this point. This was on the 22nd at about midnight. And the reason why is we have higher low and higher high. So this, again, was on the 30-minute time frame. Excuse me. Oops. Because we're in an uptrend on this time frame, as I said before, we should be focusing on buying long. But what I would do to know where this uptrend is going to end, I would have gone to that 120 or 150 or 180 to see where's the top of the field of play. And in that case, we saw the supply zone. So this kept going and going and going until here we are now reaching into that higher time frame supply. So now we should stop taking longs and possibly look for the change in trend to go short. It took it a little while, but right here is the trend change. Right there. The reason why is now we've made lower high and followed it with a lower low right there. So now we look for shorts. Okay, if we're looking for shorts at this point, again, now we can go to the bigger time frame and see on this move down that started February 23rd, where should it stop? All I have to do is go to that bigger time frame. Where is it? Here it is. Nope, that's the upward one. This is the lower. So now we're in a downtrend. And looking at this chart, looking left and down, doesn't really look like a great demand zone here. We have rally, we have base, we have, oh, that's a base, rally, but no real follow through. Maybe. And we have rally, base, base, rally, one follow through candle. We broke out of a prior high. That's why I was saying maybe. But honestly, if I'm looking for a zone, let's see, this one may have already been used. Tested. So still might be some pressure there, but not quite sure. That's not good because too much basing. I don't really see anything back here. So I might pick one of those two. So as we're moving down in trend right here, I would continue to look for shorts until I see the market is turning around. And where's it likely to turn? Possibly at one of those fresh areas of demand. And you can see the first one, we had a little bounce there, but honestly, didn't really care too much. So might have been forced out a little early, or once we see all the demand zones breaking, we know that this is likely to keep going. And look at this, we're bouncing here at that lower zone. You know, it was only tested a little bit, so there it is bouncing, and we may be getting a reversal of trend at this point because we've hit the higher time frame demand zone. And sure enough, it did. It reversed there. That's how you pick the trend reversals. If you're trying to pick the absolute high and absolute low, the way you do that is you go to this higher time frame and find the top and bottom of your field of play. And that's where prices will typically reverse trends. For instance, if we go out to the S&P futures right now, actually, I'm going to go to the continuous contract on the ES, and we're going to go to a weekly chart. And we're going to clean this up. The reason why I'm going to a weekly chart is we've been moving up and up and up, and we're starting to get some weakness right now. As a matter of fact, on my Twitter account, I was talking about a possible head and shoulders formation that had been going on here, and we've broken down. Oops, come on. Right there. Okay, so you have your left shoulder. We didn't really have symmetry though, so it's not the best looking one, but there's the head and there's the right shoulder. Kind of a weak right shoulder. And actually on the right shoulder, we ended up hitting this little drop-based drop supply zone right there. Make sure I get that right. There it is. As you can see, and what we've done is we've actually closed last week. We closed below the area. Now, with most patterns like this, just so you know, I don't trade breakouts typically. I usually wait for a retest after the breakout. Well, look what happened. We closed below, retested the neckline from the underside. Pretty typical, right? Oh, let me take this off a second. There it is. So there was our retest, and now we're likely next week to continue our move to the downside. So if this is currently in a downward trend, say on a daily chart, I'll answer that, Paul. Let's say we go to a daily chart right now. We are in a downtrend. Okay, the way I know is a couple different things. Number one, lower highs and lower lows. And these are all lower highs or same highs. And like I said, we have the lower lows going on here as well in between all these. So that's simple downtrend identification. Well, we had a little bit of a break here. We made a higher low, but then we came right back with the lower highs and lower lows again. So we're in a downtrend. So the question obviously is, where's this downtrend going to end? The downtrend should end at the higher time frames demand zone. So if we're considering this daily chart to be our zone, I'm sorry, not our zone, our trend time frame, the daily chart, that means that our perspective time frame and the identification of the field of play should be on the weekly chart. And I do that quite often when it comes to some longer term trades. You can even use the weekly as your trend and then the monthly for the field of play. Okay. Now, a great question came up from Paul. Where should you start? Should you be starting on the lower time frame or the higher time frame? And the answer is yes. It's your choice. I prefer to start on the lower time frame and work my way up just to make sure there's zones nearby I could possibly trade. Because if there's no zones nearby, it's frustrating. There may not be anything to trade, right? However, some people prefer to start on the higher time frame and work their way down. There's not a perfect way to do it. As long as you look at all three time frames, that's all that really matters. But personally, I don't really like to start on the higher time frame, go down to my trend, and then find out there's no zones nearby, so there's no entries. Okay. Does it depend on the day trading versus the longer term swing trading? Not really. Again, the process is the same. It doesn't matter the time frame. So I typically start off on the lower time frame, looking to see if there are zones nearby. Then I go to my trend to see which direction I'm supposed to go with those zones, and then the perspective to see how much more room there is. I'll go through walk through some of it. For instance, right now on the daily, we're moving down, right? That's our daily chart. So if I'm looking to make a trade, I can go down to the 240, and on the 4-hour trade time frame, we actually just broke a supply zone I thought was going to hold today. So that's telling me that our trend is in trouble for breaking supply, by the way. As you can see, we had rally, base, drop, and we paused there today, but we're able to break up. Yeah, it's the same on stocks as it is on futures or anything else. Charts are charts. It doesn't matter what the security is. You can do the same thing everywhere. So our next area of supply is up here. That's what I would see. Rally, base, 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 and drop. This is not a great supply zone though. And I say that because it failed to breach prior lows without a correction. They typically want stronger zones for that. Compare this zone to this. Rally, base, 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 drop. Notice how that drop broke out of the prior lows, or did it? Actually, no, it didn't. That too is a weak zone. So we have some weak supply zones overhead. Anyway, if we go back to the daily time frame, we are still technically in a downtrend unless we break this high at 44.84, which could happen. As mentioned, this one was already broken. So if we're in a downtrend and we hit this area down here, what we need to know is, are we actually changing trends? And the question will be answered if we're at the bottom of the field of play. Now, could we reverse somewhere else? Yeah, but the probability is highest that we would reverse only if this is hitting a weekly demand zone. So looking at the weekly chart, I look back and I do not see a demand zone here. Let's see, what is the high on this? 35.90, not 39.58. Close here, 39. So that's not even a zone. You know, the nearest zone that I have is that on the weekly. Drop, base, and rally. So could this be the end of the downtrend? It could, but the probability is a little bit lower because we're not at a demand zone. Now, there are some other signals that are going on here. So yes, we can do the same thing on stocks. Let's go to Tesla and let's change this to, let's say, an intraday opportunity. So if I want to start off on a 15-minute time frame, let me clean up my chart because I'm doing some analysis there. First thing I might do is look to see, are there zones nearby that I can trade? So I start at current price. I usually use a horizontal guideline and looking left and down. Let's see, that's not a good zone. It's actually retested this anyway. That's a zone right here. We have rally-based rally. Again, if you want to learn more about how to do the zones, all you have to do is join me in the E-mini think tank, and you got the videos right here on how to actually identify zones and the documentation that goes with it. So I'm not going to go into all that right now. But right here, we have a rally-based rally on Tesla, 779.10, 773.61. And I'm going to go back and see if there's a supply zone here overhead. Looks like it might have one somewhat nearby. Above these highs, there we have rally, base, and drop. Looks pretty good. Right there. So now I've got two zones I identified, a supply and a demand. We're in the middle. Now, do I know whether or not I'm supposed to be going long at demand or short at supply? Not until I look at the trend. So I go from the 15 to the 60 times 4 and take a little bit of a step back. And the trend appears to be down, at least on this time frame, right? So now that tells me if the 16-minute trend is bearish, on the 15-minute supply entry shorts. However, demand targets. I'm not supposed to be entering into longs. I'm just looking to exit shorts. Now, if I want to know how much more room we have, do we still have enough room on the field of play to continue to short here? I need to go to the higher time frame. So I'm going to do just that. I'm going to go out to the maybe the 4-hour chart. You go to that 4-hour time frame to find that field of play. So let's do that. 240. Here I am. And you can see that this downtrend that broke out of the sideways motion we were in. And we want to know, is this going to continue or are we done with the downtrend? I put in a horizontal line and look back, and I'm looking to see where's our nearest demand zone on this time frame. Because if we happen to be sitting at demand, then we may be reversing trend. Right now, we're not at a demand zone. We have a drop right there. We did start a rally from this area, but there's no basing area, no basing candles. You know, if you try to consider this to be your rally, 1, 2, 3, 4, 5, 6, 7, too many basing candles, it won't work. Not to mention, I think one of the greens closed outside. High here is 711. The close on this one is 711.95. It's just above. Okay. So if I'm looking for my zone, I would say it's actually this. Rally, 1, 2, 3, 4, 5, base, and rally, new high, just barely, but it qualifies. It's not the best of demand zones, but it's my demand. That's the bottom of the field of play. And therefore, we did come close but didn't actually hit it. Could this be the end of the downtrend? Possibly, but not expecting it to. I think we still have some more room to go. Yes, the RSI is completely different. That's an odds enhancer. I've actually talked about that before. If you want, again, if you haven't been in the session before, you need some review. Oh, that's not what I wanted. I want to go to type in RSI, YouTube. If you go to YouTube, one of the places you can go to is Wealth Builders HQ. And I subscribe to it, so it should show up on the left side here. There we go, Wealth Builders HQ. And you can go to the playlists. Under the playlist, you got the Trading Coaches playlist right here. And actually, I'll just copy and give you the link right in the chat as well. Make it even easier for you. And this video will be up there as well eventually. And you can see that some of these are Ryan, some of these are myself, some of these are Tony. And let's see, managing your risk, Fibonacci. I thought there was an RSI one in here somewhere. Pretty sure there is somewhere. Like I said, we've been doing these for a while, so I'm not going to keep going through it all. But another place they have this is actually on my channel, if you're interested. Close that. And my videos. Oh, not that one. Come on, get back. Anyway, there's an RSI video that I did for education. So if I go to playlist, it'll be easier for me to find. There we go, education. Oh, that's not where I put it. It's not the market analysis. No, it's good videos. Anyway, if you look, you'll find it somewhere in there because I do videos every week about the broad markets as well. But there were some educational videos I did quite some time ago. There it is, RSI is a trade filter. Knew I'd find it. And there you go. And don't forget to like and subscribe, as they say. So anyway, getting back to the time frames, yeah, this is telling me that we did come close to the bottom of the field of play. So we may have ended the trend. Obviously, the way you all know we've ended the trend is if we get confirmation of a trend reversal. We haven't seen it yet, though. And the RSI can help me with that. So if I, again, go down to the 60-minute time frame, I'm not really seeing a trend reversal signal yet. And there are things that can confirm that. So, when you're looking at the different time frames, this is just an overview. It's just not, set in stone. But what I said before holds true. You want to typically use a factor of 5, but you can fudge it a little, use 4, 5, or 6. So if you want to day trade in and out, you can use a 1-minute chart, then 5 for the trend, 30 for the perspective, or you can do 2, 10, 60, 5, 30, 120, 150, 180. Again, you just go through different time frames, whatever you feel comfortable using, and that's what you want to use. So this is definitely not all inclusive, but it gives you an idea of some of the different time frames that you could possibly use. Okay, where was I here? Yeah, and getting back to where we start, I usually like to start with the zone time frame, and that way I know if there's going to be a trade idea nearby. If there's no opportunities nearby, then there's no reason to continue wasting time looking at the security. So once more, if I'm looking for stocks, I don't really trade stocks too often. I usually do futures, but let's say we have one nat gas, UNG. It's the ETF that tracks nat gas. Okay. And perhaps I want to day trade it on a 2-minute chart. I can go down to that 2-minute time frame. It may not be the best idea. Anyway, I can still do it. I just got to find zones. And I don't really have anything nearby. As far as demand, there's no demand nearby. Let's find a little bit more heavily traded security. Let's start off with a letter. Roku, there we go. Try that. Random. So here I am on Roku, 2-minute chart. And again, just do the same process. Look for the zones first. And I don't really have anything. I mean, there's good buying pressure comes out of this, but I'm not really seeing a good zone. Okay. So looking left, base, that's rally. Doesn't work. So go back a little further. It might be here. We have rally, base, and rally. And it just barely broke out of prior highs. So that's going to be it. There's my zone. For supply, might be nearing it right now. You can see it. We have base, let's see, rally, base, 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 and drop. Or did that close inside? It might not have. As a matter of fact, it didn't. So this is going to be my zone right there. You have drop, base, and drop. Not a great zone because it didn't break the prior lows, but it's a zone. Now that's on the 2-minute chart. I go to the 10-minute to figure out which direction I'm supposed to be trading. And it looks as though we are in an uptrend, right? Great. Now, there's a little bit of weakness in the trend, but not too bad. And I need to know, is the trend going to be able to continue? So now I can go to the 60-minute. So what I've done here was I started off the zone time frame is 2 minutes. I found zones. The trend time frame was 10 minutes. I found the trend, uptrend. And then I went to the perspective time frame, which was 60-minute. And I need to see, do we have room to go, or are we coming to the end of the trend? Well, looking left again, we have drop, base, and a big gap down. So this is likely to be the end of the trend, but we're not there yet. So we still have room on the field of play. So then I would go back down to my 2-minute time frame and look to see, okay, I should be buying at demand. Target 1 is my first supply zone. I don't get out right at supply, by the way. I'm going to exit before we get there. If you try to exit at the same time everybody else is, you have a lower probability of exiting. So you want to get out while you can, not while everybody's rushing for the same door. And for my stop loss, I would simply place that below the entry area. That's it. Now for target 2, it's kind of interesting what I do for target 2. Why not hold on until the trend ends? You know, typically when I'm trading, I'm going to find my entry, my stop, and target number 1 on the zone time frame. And the reason why I do that is obviously that's where we're trading. But my target number 2, you know, I've already gotten paid when I hit target 1. I've got money in my pocket. It's a winning trade. So what I can do at that point is move my stop and I've protected my profits as we're moving up. But my target 2, number 2, is basically going to be the end of the trend. And remember, where's the end of the trend occur? At the top or bottom of the field of play. So my second target, believe it or not, I'm actually going to hold on till we reach the end of the trend and get out just before we hit that top of the field of play. That way I get bigger winners, right? You know, when I take a look at, and by the way, when I do the work for the E-mini think tank, let me show you something here. E-mini think tank. Now let's go to previous session. The way I start off the live sessions in the E-mini think tank is like this. I share trade ideas for educational purposes. So back on the 16th, I missed one of these. Anyway, back on the 16th, you can see I had 1, 2, 3, 4, 5, 6, 7 trade ideas. And some of them hit, some of them did not. But what we do is we identify where we're getting in, what the stop would be, and how much risk we have in the position. We have our target and how much we'd make, target and how much we make. Typically, target 1 is going to be the first opposing zone on your zone time frame. Target 2, however, I try to hold on until we reach the end of the field of play. That way I can have bigger winners. And the reason why I do that is risk management. Let's see, this is this month. So far, this is how we've done in the trading. We've had 6 winners, 3 losers. So this is a running total. I keep track of all those trades. Okay, I got to update it. It hasn't been updated in a little bit. But here's the interesting thing that I look for. When it comes to my trading, my average loss should be relatively small compared to my average win. Okay, and the reason why I do that is I don't have to be right all the time. You know, this month I'm doing pretty well. I'm right 2/3 of the time. even though I only have 20% rate on all the trades, the ones I'm actually taking, I had 3 losers, 6 winners. So I'm doing pretty well, right? But I can also, let me show you something kind of interesting. Let's zoom out. If I go to, oops, wrong button. File, open. I'm going to go to, let's see, E-mini Think Tank from December 2021. I think this is the one. Yeah, it is. Perfect. This is pretty amazing. Okay. That's all. There we go. Okay, notice that month, December, we were profitable for the month, but I had 13 winners, 18 losers. That means I was only right 41, we'll call 42% of the time. I had more losers than I had winners for the first time in like a year and a half, I think it was. Okay, but you walk away a winner. Why? Because the losers are smaller than the average winner. And how do I get away with that? Because my first target is just to book a little bit of profits and to make myself feel comfortable about the position. Then I let my winners run until they hit the second target, which is the end of the field of play. I want to capture as much of the overall trend as I possibly can. So that's pretty cool, right? You don't want to trade a lot. You just want to trade smart. And thank you, Stephen. Stephen said these ideas are a really good starting point. Yeah, I believe so. Oops, I'm going to zoom back out. There we go. So it doesn't matter what we're looking to trade. Again, I will use for my first target, my first opposing zone, but then try to let that winner run. And where's my stop after the first target? Actually, I have a whole set of rules for that as well. If you take a look, where's the rules? Bonus videos, there it is. Should be a bonus video on stops and trailing stops. I forget where it is. It's in here somewhere. And there's a document on it too. Thought it was in here. I'm not finding it right now. But anyway, what happens typically, again, I teach this in the class, but normally what I'll do is once I get halfway to my first target, I'll actually move my stop to break even so that way I don't lose any money. And then from there, once we get halfway, so let's say this does bounce and we get roughly halfway to my first target. Once we hit that point, I don't want to give back any of my profits if I don't have to. Okay. I never do, but never want to, but it's going to happen. So what I do is once I get halfway to my first target, I'm going to go ahead and move the stop up to break even. Oops. And then I'll start using a trailing stop as we continue moving in my favor. So once we hit target 1, I lock in some profits, but I also will lock in more profits no matter what, because again, I got the trailing stop that's following. And then I'll keep going until I reach my second target, and then it takes me out. And I tend to use moving averages for that because they're really just easy to use. You can program in the computer for the most part to automatically take that. Yeah, I'm going to automate a lot of this stuff. Really what I'm doing, I'm showing you this on TradingView, which if you're interested in TradingView, it's a decent program. It's up to you. What's going on there? The RSI is below 40 right now, so I would not take the long. Yes, that would filter me from taking the trade unless there's a divergence. Because right now, Julio's saying in the 2-minute, the RSI is below 40. Shouldn't I expect a divergence there? Well, it may happen, it may not. But the problem is right now we got too much momentum to the downside. That's telling me there's a higher probability of this breaking through the demand, and I shouldn't go long. So for me to be able to go long, I actually need a little bit of a bounce out of the zone, then a retest with what we call positive divergence. Okay. So this is what I was going to share with you if you wanted. If you like this program, you can go ahead and do, there you go. There's a link that you can use. It'll get you 1 free month. Anyway, how much of a trailing stop do I use? Well, also before I forget, Omega Charts is a charting package I typically use when I'm trading. And that's just doing some analysis from yesterday. So right here is today's charting. And this has the ability to automate a lot of these processes. So there's coding and things you could do in here. I don't have it set up right now, but under trading, I can actually automate things, which is pretty cool. So I am going to be doing that, but it's just a matter of time. Anyway, question was how much of a trailing stop? It depends on the security. Typically what I do in TradeStation, yes, you can place trailing stops on options. Yes, you can. You can place them actually on not the option premium, but on the underlying securities price. And that's a better way of doing it. You just have to get used to doing it. That's all. And let's see, your trail stops always seem to take them out. How do you keep them loose enough? It's just you got to kind of figure out the volatility of the security. I'll give you the way I do mine. Okay. One of the ways I do mine is, for instance, let's say we've got a trade here. Well, this was a trade from yesterday. Okay. We had what's called an opening range breakout trade. And the entry was based on, well, I'll just keep the arrow there. It was based on the 15-minute chart right there. What happened was we had the opening range that's established in the first, there we go, first 15 minutes of the day. Okay. So, oh my gosh, I cannot get the set right. It's here. There it is. So there's the entry as prices came back to this little mustard colored line, I guess, right there. Once prices moved up and moved halfway to my first target, now I'm going to go in and use moving averages as a trailing stop. And the way I do it is, remember, I want to stay in this trade until the trend ends. Well, this is a 15-minute time frame for the chart. That's not my trend time frame. That's my zone time frame, right? Right now, what I'm doing is I'm using zone time frame 15-minute. My trend time frame would be a 60-minute. And that's what I'm concerned about, is where's the trend ending? Well, remember, the trend should end at the prospective time frame zone. But in the meantime, if the trend fails, I need to be out. So I'm going to focus on a 60-minute time frame to manage the trade. This helps you stay in instead of getting too tight of a stop. Because now I'm going to set my stop, as I said, on the trend time frame. And what I'm going to do, my rules are pretty simple. I'll write it out here for you. Once price moves halfway to target one, move my stop to break even. Okay, that's number one. Come on. Then I'm going to exit. Number one, at target, obviously, right? If price gets to target, I want to get out. Or number two, at Walmart. No, just kidding. Or if price closes beyond the 8 exponential moving average on the trend time frame. Remember, I'm concerned about the trend, right? Yeah, the stupid jokes. Anyway, if price closes beyond the 8 period moving average on the trend time frame, not the zone time frame, or number 3, if price breaks the 13 EMA on the trend time frame. So that's it. It's pretty simple, and you can automate this as well. So why in the trend time frame? Again, because that's what I'm worried about for the market's changing trend direction. I use the 8. I actually got the 8 from a book. There are also Fibonacci numbers, 8, 13. But the 8, I got that from a book called The Market Maker's Edge. It's an older book from, I think it was like 2000, 2001. A market maker from Morgan Stanley wrote the book. Okay. So for the close, it's on the current candle and you get out on the very next candle. For the price break of the 13, you got to use the previous candle's moving average. You can't use the current candle because it's not fixed. So let me go ahead and change. I'm already on a 60-minute chart. Let me bring in the moving averages. Here we go. Go into price, add. Exponential. I like the exponential ones because they're a little more sensitive. than simple moving averages. Add indicator to select a pane. And 13. That's it. Now it's not perfect, but you can see when you're in a strong trend, you usually do not close beyond the 8. Look at that. Kept you in, kept you in, kept you in, and finally broke above. So in this case, we were going long, and you can see right here, they're in the wrong order, but it's working. And it might have been taken out there because it did go below the moving average at that point. Typically, I don't use them until they're in the right order, meaning the 8's got to be above the 13. So it probably would have been taken out on that candle before it hit target 2. But let's say we didn't get out. Well, let's see where we are getting out here, if at all. Yep, there it is. So on this particular candle, again, you can't use the current candle. You always have to use the previous candle because the 13-period moving average is not fixed until you close. So right there, it would have been on this moving average, which was 42.45. You would have been stopped out as prices broke below that on the moving average. And sometimes it gets you out too soon, but better than too late. So I can do this on any security at any time frame. If I go out to G6 B H22. Oh wait, I did that wrong. There we go. This is the British pound, and I'm just going to clean this up. There you go. You can see that when you're in a strong trend, those two moving averages can work pretty well on any time frame. This is on a 30-minute time, a 60-minute time frame. So right here, you would have been stopped out. There's a close above. Actually, we would have stopped out because of the breach of the 13 right there. Or the close above, you get out on the very next candle. If I were to look at this from a daily time frame, most wrong candle, wrong daily. It works the same way right there. You can see I'll do downtrend. On this downtrend, if you were short somewhere in here, you're not getting out yet until you either close above or breach right there. You breached the 13 and you would be out. It was basically breaching 13 the previous candle. In the bullish trend, kept you in, kept you in, kept you in. And there you actually broke the 13 moving average from the previous candle, you're out. ORBO is opening range breakout. That's a specific strategy that I have right here in the members area. I'm sure it's in the documentation somewhere, but we do have what are called breakouts, I think somewhere. There it is. E-mini opening range and news breakout fade trades. So there's bonus strategies that I teach in E-mini think tank. Anyway, I got to get going. That's the end of my time for today. So hopefully you got a little bit more of information about, trading using multiple time frames. It's basically the three. We're looking for the zones, the trend, and the field of play. So if you want to learn more, as I said before, there's lots of free videos in this session or section. All you have to do is click on the link. If you can put that in again for the E-mini think tank, I'd love to have you join me for that. And if you click on that link, you'll see. Thank you. Yeah, I definitely will enjoy the vacation, visit my mom. But when you click on the link right now, let's see if it's got there it is. Yeah, you got either quarterly subscription or you can do a monthly subscription. It's up to you. If you do the quarterly subscription, you'll also get 2 weeks free trial, meaning you get to try everything out. You get all the live sessions and all the videos. You get access to that for 2 weeks without any risk. If you cancel within those 2 weeks, we don't charge you. So if you're interested in trying to kick the tires and check it out, see if it's right for you, it's a great way to do that. And yeah, if not, if you really want it, you can either subscribe to the quarterly or you can subscribe on the monthly session and you just get auto billed and you can cancel at any time. So like I said, thank you for being here. And this video will hopefully be posted pretty soon in YouTube if you want to review it. Until next time, everyone, trade safe, trade well, and take care.